in December calls saying, I don't care what you guys think and which craft you use and all this stuff, but I don't want to have to pay any more for this. If that's all the higher that it gets and I lose all the money that I paid for the call, I'm going to make money feeding cattle and hogs. I look at it and say, wait a minute, you want to give me 27 cents for a right to own my corn at 426 that I missed? You bet you got it. And so we sold some against whatever production we had left. We're going to be wrong if we get back above that level again. But that's going to create a weather problem, and we did it for the July, which expired June 21st, long before we get hot weather. And wherever we're at in June 21st, a good spring, a dry spring, we got plenty. You heard Alamoto and 50 weather. Dry spring looks like a perfect year. I've heard that from a couple of different analysts that I expect. So we want to watch this area. If we're going to get a chance, I would call it a dead cat bounce. You drop a bag of corn or a dead cat high enough, it will bounce. And so if this is over, we get a little bounce, and you ought to see a lot of selling coming in. And we saw that with the large specs trying to get out of some of their positions. So that's the story in corn. Good thing we're not serving lunch. It would be cheap because you won't have a good appetite when we get done. I've written some articles over the years. Actually wrote one about 3 years ago, but I follow the money, know what the large spec is doing. And if anything prevented me from being too bearish this corn, I understood that there's a story out there. And there was a real good story that if we didn't have an increase in production, and all the analysts were right that maybe we stay the same, and most of all we see about a 200 million bushel reduction, and we'd have to get above 425 or now we're concerned about acres, we're concerned about weather because the production got lost. This is a large spec in what he does, and this shaded area is his long position or short position. He was short in March for, a little bit last March when the economy was going to go to pot. But if you notice for the last whole year, since April of 08, we've got a longer term chart, he's not been net short once. So I view him as a guy that owns, he's got a grain bin full of grain, it gets half full, it gets totally full, but he never emptied the bin and sold more in his neighbor's corn. He was maybe neutral and short a little bit, but all this time he kept something in reserve. And I look at it as saying, maybe I don't want to sell all my corn. I'll keep my profit in my bin, and I'm going to fill out a Schedule F that says, boy, Obama, you better give me some tax payment because I've got a negative cash flow for the last 2 years, negative income tax. I'm going to store my profit somewhere else, and I'll pay for it later. And maybe I'm storing corn at $3.30 hoping to get to $4. But look at what he did. He had increased his position in corn, I think anticipating the same thing that we thought. There was no way in the world that we grew a bigger crop after all the rhetoric we heard, and that crop report's going to be bullish, and I'm going to be there when that index fund is re-indexing and puts money into the new money into the bank, and then I'm going to be able to capitalize on that. He's an opportunist. He wants to buy a story that's coming. And I had dinner a couple years ago with Linda Smith and I did. I thought he was 30 years old. He was managing a couple billion bushels, and I don't think he'd seen a cob of corn. He went over to the Board of Trade and saw the visitors film and saw that I'm on there, and he said, "Oh, you got nice machinery. You got a lot of money tied up in that." And he said, "Well, what's the combine cost?" I told him. He said, "Wow, you got a lot of risk." And I thought, man, that guy's trading my grain. Boy, is he a pigeon to be plucked. He doesn't know what's going on. And I said, "Why are you doing what you're doing? And why are you so transparent? We hear about what these speculators, these funds are going to do well before they do it. It's kind of like buying a fund or a stock and you get a prospectus. And it tells you in there how I'm going to use your money. And in that prospectus, if you buy a Goldman Sachs fund, it says we're going to put 5% in corn, 5% in beans, 5% in wheat, 10% in crude oil, 20% in gold, and that's where your money's going to go. So you don't have to do all those little things. We'll do it for you. And that's the focus we're going to keep all year long. Then every year you go back and you say, wow, we have $1.2 billion, we made 20%. Now what made that? Well, gold was up, corn was unchanged. We were unchanged from January 2nd last year to January 2nd this year. It's crazy. Went all up and down and ended up nowhere. And that's why there was a lot of money lost trying to trade this thing. And then you say, well, I got new money coming in, and crude oil is higher. We made money in crude oil, and we only want 10%, but if I look at it now, that's 15% of my portfolio. So for me to get back to where I was, to that same prospectus that I told you, only 5% of all the money I have is going to be in corn and beans. I have to sell some crude oil, maybe buy a little corn, and buy a little wheat. We saw wheat go up $1 because it lost a lot of money in a year. They still want 5% of all money. But the bottom line was they made 17% or something over the year, but it wasn't corn doing it, a little bit of beans. They lost money in wheat, but they had more invested in other commodities that went higher, gold and crude oil and all that. You know, they doubled their money in crude oil probably. So that's what they do. And it's no different than if they were secret about it and you bought one share, you got a prospectus, and then you go on CNBC and you say, hey, I got a share of Goldman Sachs, this is what they're going to do. So it's not like, you know, they have to do that by law. So you get a lot of guys trying to preempt them. They want to buy corn early because they know the index funds are going to do this the first 2 weeks of January. And these guys are the large specs. They're not the index funds. The index funds are normally long only. And when I talked to this kid that was managing my corn in a hedge fund, you know, I said, so why what's your objective? And this was, you know, again, 2 or 3 years ago, so you understand they were on track. They could see a story in ethanol. And he said, Jerry, I think we will make $2 in corn before we lose $1. And we will keep buying it until we're right. And that's why you see them, they keep rolling. You say, why are you rolling from these to these? Well, it's part of their prospectus, you know. And they could say, and then recently, Goldman Sachs said the other day, about a week ago after this report, says, we are changing our allocation. We're advising getting out of all long corn. We don't want to be in corn. So you'll see that orderly liquidation. But that's why I expect was wrong going in that report. Never in 25 years have I seen him wrong going into a report. He was long and wrong, and he was long up to 18 or 19%, 20% is max, anything over 16%. I looked for a reason to want to sell grain. There wasn't any. I wanted to see a keyword ripple down or a moving average going short up here when there was nothing. Everything was pointed straight up. He got caught. Limit down on the 12th. He couldn't do anything. It's against the law for a fund to trade limit up or limit down. They have to wait till it trades, and then they can trade again. So he had to liquidate going further. So then what he did, he went from 18% of all the open interest long, he owned 20% of what we'll say, and he went down to almost 12%. He liquidated almost 40% of his position the week from the 13th to the following Tuesday again. And now today we'll find out what last Tuesday looked like as the price of grain went down. So when you look back at it, he's got a lot of, what you don't want to have happen is this guy say, you know, I went to Jerry's seminar and I saw this island up here about 12 months worth, 10 months worth of trading, or whatever, more than that, it took almost a year, well, almost a year. So this is a weekly chart. So you almost could say this is an aberration, and when you see something like that happen, it's this was a bubble that burst. Fortunately, we didn't take away all the equity we got, because ethanol was there. The Dow Jones took out 10 years worth of equity. We lost 5 to 6 years worth of equity in housing. You had to stimulate the car business. And he's saying, I looked at that and saying, you know, I think corn is going to go to $2 before it goes to $5, and that sucker gets short. And from being net long to net short. So we'll watch that pretty carefully. And it has a lot to do with the economy. If he's watching the stock market, he's probably saying, I think I want money in my stock and not